Hello everybody. After a very lackluster 2018, the market is continuing its downtrend in 2019 due to a variety of reasons. To throw more insight into what has been happening in the markets and what is expected to happen in the markets, we have with us Dr. Vijayakumar VK, Chief Investment Strategist of Geopolitical Financial Services. So welcome to this session.
Thank you.
9 consecutive sessions of downtrend, the first time in 8 years that the Sensex has gone through such a bad period, 1,600 points gone down. So what are your opinions? What is the cause of this downtrend in the market, sir?
Yes, the markets have turned distinctly weak. Actually, India is underperforming the world markets by a sizable margin. If you look at the MSCI World Index, the MSCI World Index is up by more than 9% so far in 2019, calendar year 2019. The MSCI US is up by 11%. And the MSCI Emerging Market Index has appreciated by 7.6%. But in India, we have declined by 4.6%. This is an unusual underperformance. Actually, the global macroeconomic backdrop is very favorable to equity markets this year. They said further rate hikes are on hold. The market was actually expecting 3 rate hikes by the Fed in 2019. So the Fed going dovish in monetary policy and putting the interest rates on hold is very good news, perhaps the best news for the global stock markets. That is why after this Fed monetary policy announcement, global markets have rallied. But India has declined. The answer is simple, it is because of domestic reasons. First, we have the anxiety related to concerns relating to the outcome of the general elections. The market is anxious whether we will have a stable government after the elections or not. That is one concern. And recently we had, of late, we had this terror attack, very unfortunate terror attack. After this Pulwama terror attack, well, the market is in a wait and watch mode. Foreign institutional investors are continuously selling. They are in a wait and watch mode because we do not know what will be the impact of this Pulwama terror attack in the market.
Talking about a reaction from the Indian side, how that can affect the markets?
Exactly. Because right now we are in uncharted territory. The army has been given the powers to choose their time and choose the mode of retaliation. So we do not know right now what exactly the army will do and how Pakistan will respond to the Indian military.
What happened during the surgical strikes? What was the market reaction?
Surgical strikes were more localized in nature and there was no response. But this time it is of a different nature altogether. And the Pakistan Prime Minister Imran Khan recently went on record to say that we will be retaliating very strongly. So the market has some concerns regarding that. We are in uncharted territory as far as these Pulwama terror attack and its consequences are concerned. It is very difficult for the market to take a view in the short run. We'll have to wait and watch. So major investors, particularly foreign institutional investors, are in a wait and watch mode, and that is why the market has been weakening during the last, as you said, consecutive 9 days of declines.
So FIIs have been selling 1,000 odd crores, but the DIIs have been investing, I think around 5,000 crores of inflows have come in. The result season have also more or less finished right now. What is your opinion on the just concluded results season?
You are right. The FII selling has been more than compensated by domestic institutional buying because the fund flows domestically continues to be good, even though there are declines in certain segments, particularly the systematic investment plans. SIPs are doing well. The small investor is very optimistic. That is good as far as the markets are concerned. Now, you talked about the result season. The just concluded result season is a mixed result season. It has been on expected lines except for the automobile sector. The leading banks have done well, particularly the private sector banks, and The large names in the public sector banks also have turned around.
SBI surprisingly.
Yes,
came
yes,
in.
SBI has clearly turned around. Therefore, 1920 earnings from the banking space will be very attractive. There is a message from that to the investors.
Right,
Yes.
okay.
Consumption has held on. IT is doing well. Pharma, it has been a mixed space, but
Right.
altogether the results are not that bad. But then in automobiles, there has been some disappointments which the market did not expect.
Right.
And that is already reflected in the price.
Surprisingly, all the Sensex automobile companies missed the consensus estimates. This thing, be it Mahindra, Tata Motors with a huge loss.
Tata Motors is a Jaguar Land Rover play now. It doesn't have much correlation to the domestic.
Two-wheeler space also, Hero MotoCorp, Bajaj Auto.
Yes, Bajaj Auto volume-wise has done well.
Okay.
That is still holding on. So in the automobile space, the results are not on expected lines. But I feel the market has overreacted.
Okay.
If you look at the leading player in the car space and also the leading players in the tractor and SUV space, I think these stocks have corrected by more than 35% from the peak. Markets always have a tendency to overreact. So this overreaction to bad news may be an opportunity to buy also if the investor has a long-term time horizon. The coming few quarters also, the results from some of these companies are likely to be weak. But then the market will start discounting their better earnings in future when the market turns.
So basically a good opportunity to buy into some blue chip companies. And what would be the strategy? I mean, would you suggest an all-out investment, or what would be the strategy for investment into these stocks?
I will not recommend an all-out aggressive buying because even though the markets have corrected, the markets are not even now not very cheap.
Okay.
Because during the last 4 years, the earnings has been below expectations, very tepid earnings growth. So because of that, even now, if you go by historical valuations, our valuations are above historical valuations, not very cheap. But then I believe 2019-20 is going to be very good from the valuation perspective, from the earnings perspective. We can expect easily 20% increase in corporate earnings in financial year 2020, 19-20. Right. And from that perspective, forward earnings perspective, the valuations can be regarded as fair. You can make what you suggested, all-out buying, aggressive buying. That can be done only when the valuations are very cheap. They are not very cheap now. Therefore, we would advise our investors to go for calibrated buying, installment buying in stages, in good quality names. But then if an investor has a 4-year time horizon, well, that investor can make a one-time investment in the mid-cap stocks because mid-caps have corrected. Small cap, mid-cap category.
More than the large cap.
More than the large caps. And the valuations have now become attractive. So there, you need not wait for installment purchases. If you have a time horizon, you don't expect very good results for that investment the 6 months time. But if you have a 3 to 4 years time horizon, this will be the right time to make bulk investments in mid and small caps. Otherwise, ideally we should go for systematic investment plans and installment buying. That's why I said calibrated investment strategy. We would like to convey an important message to investors because we are finding some tendencies from some quarters to stop SIPs. That is not good. If you go by historical experience, stopping SIPs have often proved to be big mistakes, big blunders. Because people believe that now the markets are going to come down, therefore after the elections when the markets come down I will buy, till then I will stop. That will be a wrong thing to do because it is impossible to time the market. And the only way by which you can make money in the market is to make systematic investments over the long run. Perhaps waiting may be a good idea, but we do not know. We do not know. Already the markets, as we speak today,
So
the
you
markets.
need not be discouraged because I would guess last 1 year the SIP returns would have been in the negative, but it is actually working in your favor if you continue for the long term.
Exactly,
Yeah.
exactly. Sometimes the markets will test your patience. Even SIP performance for 1 year, 1.5 years, even 2 years
Yes.
can be negative. But these negative returns will turn out to be positive returns when the market turns. The market will certainly turn because abnormal events, uncertainties, and bearish trends are only for the short term, not for the long run. Right? Therefore, our advice to investors would be to selectively buy good quality stocks in stages, continue with their SIPs, and never to stop SIPs.
Right.
That is the message that we would like to convey.
Right, sir. Thank you very much, Dr. VK.
Thank you.
So there you have it. As Dr. Vijayakumar was saying, the markets have been impacted in the short term because of a variety of reasons. The election uncertainties, the uncertainties regarding the geopolitical uncertainties, I would say. But then in the long term, we have some good opportunities to start off your investments, either into blue chip stocks. For the experienced investor or for the beginner investor, you can start off your systematic investment plan in mutual funds. Continue with your SIPs if you're an existing SIP investor, because this uncertainty will definitely reap rewards in the long term. Thank you very much for joining us. Thank you, Dr. Vijayakumar.
Thank you.
Thank you.